in terms of high inflation, some of the big macro stories that are out there?
I wish I could say yes, and we'll definitely see that.
I know we hope so.
Yeah, again, it's the kind of thing where...
But he tends to touch on these
exactly.
kinds of things.
So our assumption is that he'll talk the macro picture. He'll walk us through what he sees there, what he thinks there. But I don't want to commit to any promises that I won't be able to keep come tomorrow morning when we see what the case actually is.
Well, another story I love in the Buffett space is, I think it was LeBron James, he gave him the investment advice to play basketball, right? Like, just be good at what you're good at, put your money in an index fund.
So you mean if it wasn't for Warren, we wouldn't have LeBron James?
I mean, it's possible that he's responsible for LeBron, right? I can't believe I'm talking about sports. This is so out of character. But is that investment advice of just like stick to a traditional index fund still the mainstay of Warren Buffett and Berkshire, or do you think it is starting to modernize a bit?
I think this is maybe not a super helpful answer, but what you're saying about sports there, Buffett and people in his circle have always stuck to this sort of stick to what you're good at ideology. There's actually, Charlie Munger once said something along the lines of, you know, Buffett just keeps his head down and focuses on what he needs to do to make the company run well and lets the other stuff fall to the side. The same reason Buffett's good at his job, it's the same reason that Roger Federer is good at tennis, right? It's that idea that if you're focusing on what makes sense to you and what you know well, and you just knock that out, right, that's the best thing you can do. So if those strategies have been working for you, they make sense. I feel like Berkshire thinks that its strategies have been making sense. That's that kind of thing.
So his strategy is not shifting then. This isn't like a new era.
I would say that Buffett's doing his own thing. His deputies are doing what they're doing, that sort of thing.
Yeah, he definitely has his, he does his thing for sure. Shares of Berkshire, I'm just looking at them, Class A shares, they're just down about 1% so far here in 2023. They were up about 4% last year. We're going to get full year results. What are you watching out for in that regard?
Well, so I also cover the insurance world pretty closely, so I'm kind of an insurance nerd. I'm really curious about what we see with Geico.
Yeah.
Overall, the results for auto insurers across the board have been really difficult because inflation has squeezed margins, squeezed out the profitability. And what people really want to see is a better sense of what Berkshire is doing to combat that, whether that's rate hikes, whether that's cutting back on advertising, that sort of thing. We've gotten a lot of granularity.
Which they advertise so much, as we all know and love. The little gecko.
The gecko, all that. So we've gotten a lot of granularity and visibility into that from other insurers. I'm keen to see what, if anything, Berkshire has to say about that and how results compare to the sort of difficult period we've seen the last few years.
Is there one particular data point or word choice that's going to be really critical for you that you're really on the lookout for on that?
It's funny you say that.
No pressure here.
Just because I control F. It's just like Succession, Buffett, Abel.
Yeah.
But on underwriting specifically, it's just whether or not, you know, how the bottom line looks, how underwriting profitability is shaping up. Just those factors are going to be what determines kind of the trajectory at Geico.
Just 20 seconds. Which of his businesses are doing the best right now? Because he's got energy, he's got railroad, he's got manufacturing, he's got a lot.
Obviously, the bets on energy have really been paying off. The railroad is a consistent performer, right? And that's what he looks for. He looks for utilities, the sorts of things that will bring in the cash in the long term consistently.
What we really want to know, Max, is what time do you have to get up in the morning to like read this? What
on
time does
Saturday.
it release? What time does it
8 a.m. Eastern.
Okay, sorry.
Tough Friday night for you.
Get your coffee ready.
I'll live.
We'll be looking forward to it because it's certainly a must-read. Max, that was a great comprehensive background and breakdown, if you will. Max Reyes, he's regional banks and insurance reporter here at Bloomberg News, joining us in our Interactive Brokers studio. And again, awaiting that annual shareholder letter from Berkshire and Warren Buffett, 8 a.m. Wall Street time come Saturday.
Saturday morning.
Will you read it?
I'll read it at, let's say, 9 a.m. for me. I'll do a little bit of a later start.
She's going to sleep in. She's going to sleep in just a little bit. Max, thank you so much. All right, let's get to world and national news. Off to D.C. we go, and Nancy Lyons. She's in her 99.1 newsroom. Hey, Nance.
Hey, Carol. Well, the United Nations Security Council has been marking the anniversary of the Ukraine war with renewed support for Ukraine. Bloomberg's Surf Chapman has more from Washington.
Secretary of State Antony Blinken urged rejection of any calls for a ceasefire or a useless peace plan that ignored basic principles.
No seizing land by force. No erasing another country's borders. No targeting civilians in war. No wars of aggression. For peace to be durable, it must ensure that Russia can't simply rest, rearm, and relaunch the war in a few months or a few years.
Blinken described Russia's war crimes and atrocities that require prosecution, and he added that in this war there is an aggressor and there is a victim. In Washington, Irv Chapman, Bloomberg Radio.
European tanks are beginning to arrive in Ukraine ahead of Russia's spring offensive, but Ukraine is still pushing for fighter jets. Defense advisor Yuri Sachs says it normally takes a year to train on advanced fighters, but Ukraine's pilots are ready now.
We are in a situation where first we already have pilots who have combat battlefield experience, and our pilots are ready to be trained in 3 to 6 months. They will be ready to fly these platforms.
Ukraine defense advisor Yuri Sachs tells Bloomberg jets will be instrumental in achieving the victory he hopes will happen this year. U.S. First Lady Jill Biden has given one of the clearest indications yet that President Biden will be running for a second term. She told the Associated Press today there's pretty much nothing left to do but figure out the time and place for the announcement. While Biden has long said he intends to seek re-election, he has yet to make it official. Well, during his second day on the stand, disgraced South Carolina attorney Alec Murdaugh has been testifying that he fully cooperated with police investigating the murders of his wife and son, except when he lied about the last time he saw them alive. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:41 on Wall Street. I'm Charlie Pellet. Stocks are sinking. We have got the Dow, the S&P, and NASDAQ all in the red right now. S&P is down 50 points, a decline there of 1.3%. This after this morning's reading on inflation. The Dow is down 368, down 1.1%. The Dow negative on the year by 1.1%. NASDAQ down 230, a decline right now of 2%. The 10-year's yielding 3.94%, with the 2-year 4.80%. Spot gold down $12 the ounce to $18.10, a decline there of 0.7%, while West Texas Intermediate crude is up 1.4%, $76.43 a barrel. Former Treasury Secretary Larry Summers says worrying signals of a potential sharp drop-off in activity combined with strength in other indicators point toward an uncertain economic outlook. He spoke with David Weston on Bloomberg Wall Street Week.
I think people may be reading a bit too much into the moment in terms of economic strength relative to the way things could look very differently in a quarter or two. And if that were to happen, it would obviously have some important implications for earnings.
And to hear the full interview with Larry Summers, tune into Bloomberg Wall Street Week tonight, 6 o'clock Wall Street time, right here on Bloomberg Radio. Ford shares down 1.8%. Ford is extending the shutdown of its F-150 Lightning pickup planned for a 4th week as it works to resolve a problem that caused a battery fire in one of its electric trucks. Again, recapping, stocks lower, S&P down 51, down 1.3%, the 2-year 4.80%, the 10-year 3.94%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks, Charlie. Well, as we all know, today marks 1 year since the Russian invasion of Ukraine. Business Week has several stories in this special double issue on the destruction in Eastern Europe, and that, of course, includes the cover story. And, Carol, that story is on how it's becoming clear that the cost to both sides is going to turn out to be just intolerable.
Yeah, devastations on both sides, no doubt about it. For more, return to Bloomberg News automation editor and opinion columnist Leonid Bershidsky and Bloomberg Business Week editor Joel Weber.
In absolute numbers, Russia has actually lost more than Ukraine because the Russian economy was so much bigger to start with before the war. So even though Russia is not economically devastated, it's not about to go bankrupt, it's not depending on external aid the way Ukraine is, but it's lost an enormous amount of money. It's lost more than $100 billion in GDP terms, and that is before we start factoring in the loss of life, the emigration, all of these factors that are also war-related.
Leonid, and of course the war continues. You talk about loss, and you're right. You talk about the impact on economic activity, you name it. But the loss of life in terms of people who've actually, died as a result of this war, but also people who are leaving the countries, whether it's Russia or Ukraine. You do think about the lasting impact of that when we get, fingers crossed, on the other side of this, what it ultimately means.
Yeah, well, here in Berlin, where I live, also as a Russian emigre, by the way, who left Russia when the war actually began in 2014, we see a huge influx of people from both Ukraine and Russia. And a year after the war began, some of these families have settled in, and the kids are in school. People have found jobs. They've learned the beginnings of the language, and a lot of these people, a lot of the Ukrainian refugees too, are not going to go back. The German Migration Office recently held a poll that showed about 30% of the Ukrainian refugees are not planning on going back to Ukraine after the war is over. The actual percentage is probably higher. So even apart from the actual killing and the actual war damage, the actual casualties, the loss of the brain drain, the loss of talent, the loss of active people, and it is active people who live under such circumstances. In Ukraine, it's overwhelmingly women, and they've taken their kids with them. So there's going to be extended fallout, even once the battlefield action is over. The human losses for both economies will be substantial.
Imagine a world where the battlefield, we finally might have a version of a truce or something. What would it look like on both sides when this conflict eventually does end? Because even any outcome, these sanctions have been so successful, but it does not seem like easing these sanctions eventually will end in any sort of resolution where this is the recovery is instantaneous, right? We're looking at years here.
Yeah, we're definitely looking at the worst part of this is that it's almost impossible to imagine an ending to the military action at this point, because there's really no common ground. There's no way the sides can agree on anything until one of them is satisfied that it's won. And, victory for both sides seems pretty remote at this point. But even just imagining something has happened and the war has ended, the sanctions against Russia will not be lifted again, even if Russia loses. They can only be lifted if the Putin regime falls and the successors are more pro-Western and willing to take pretty unimaginable steps in terms of rejoining the Western world. So the sanctions are going to be around for many years. The devastation in Ukraine requires hundreds of billions of dollars of investment just to rebuild what was destroyed. It's not clear where that kind of money would come from. From Russian reparations, it's not clear how much in terms of reparations Russia would actually be able to pay, whether it's possible to confiscate any of the frozen Russian international reserves to fund the rebuilding of Ukraine. It's not clear how interested Western governments will be in providing more money once the war is over, right, especially the enormous amounts that are required, because entire cities have been wiped off the face of the earth.
That last voice, of course, our Bloomberg News automation editor and opinion columnist, Leonid Bershitsky, joining us there along with the editor of Bloomberg Businessweek magazine, Joel Weber, catching up with us on the cover story, which is about the war in Ukraine. And, Madison, it really gets into just these extreme costs on both sides. It's not over. We know about the devastation, certainly in Ukraine, but both sides, extreme costs.
Extreme costs, and also, as we've been talking about this week, which is so interesting, I wouldn't have known about it without the reporting of our colleagues, is these shortages with things like ammunition impacting both sides, of course, and I imagine impacting costs as well.
Absolutely, right? And we've talked about the crowdfunding that's been going on in Ukraine to buy things like tanks and drones and other things. So there's just so many aspects of this war. We're going to have more in our last hour after the closing bell. Angela Stent is back with us. She's written a book about Vladimir Putin. She has been with us over the past year, so we're going to really dig into it with her. And then we're going to check in with the CEO who has had employees on the ground in Ukraine and has been working to take care of them and has been going to the border, the Ukrainian border, to bring supplies. So looking forward to that in our last hour here. Be sure to check out the cover story. It's a special double issue, several stories on the war in Ukraine. Carol Massar along with Madison Mills, and this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellett. 2:53 on Wall Street. We begin with a developing story and a headline from the Bloomberg Professional Service. Sources tell Bloomberg Pioneer Natural Resources is considering an acquisition of Range Resources Corp. Now, those sources say the Texas-based oil and gas explorer is weighing a deal for the smaller rival as it seeks further consolidation in the shale industry. Shares of Pioneer, they're down now by 6.8%. Range is up by 12.8%. Goldman Sachs has approved a new share repurchase program authorizing as much as $30 billion in stock buybacks without giving a timetable. And Morgan Stanley analysts say JP Morgan Chase's market cap has a chance to more than double and hit $1 trillion by 2030. The walls are closing in on online used car dealer Carvana. Disappointing quarterly results there, and the stock down just about 23% today. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, this has all really triggered a string of warnings from analysts, and JP Morgan is dealing the harshest blow here. In a note to clients, analyst Rajat Gupta says the one-time hedge fund darling's high debt levels suggest there is absolutely no equity left in this stock at all. Carvana shares had been on a wild rally this year, rising more than 110% through yesterday. That's amid a surge in what you might call the speculative corners of the market. Now, despite the sell-off today, the stock, Charlie, is still up almost 80% this year.
And that's Denise Pellegrini. Right now, again, Carvana down 21%. Those are the company stories we're following. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
We've got more Business Week to come, but first up, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. It is the one-year anniversary of Russia's invasion of Ukraine, and Bloomberg's Maria Tadeo is in Kyiv.
When you look at Ukrainian TV, the way they present this is not the one-year mark. It's not the one-year anniversary. What they say is 1 year now closer to victory.
Maria Tadeo reporting from Kyiv. Ukrainian President Volodymyr Zelensky told reporters today it is certain that they will secure victory if allies maintain their support. Well, China is pushing back against claims that it plans to provide lethal aid to Russia in its war. Bloomberg's Amy Morris has more from Washington.
Germany's Der Spiegel reported that Beijing is negotiating to send Russia armed drones. China's foreign ministry spokesman responded, saying that China never sells arms to parties involved in a conflict. U.S. Secretary of State Antony Blinken says China's government probably did approve of Chinese firms providing support, but he didn't provide any evidence of that. Blinken will travel to Central and South Asia next week for international talks, putting him in the same room as his Chinese and Russian counterparts. In Washington, I'm Amy Morris, Bloomberg Radio.
In South Carolina, Alec Murdaugh is spending a second day on the stand in the double murder trial of his wife and son. Under cross-examination, the disgraced attorney admitted there have been holes in his story.
Other than lying to them about going to the kennel, I was cooperative in every aspect of this investigation.
Very cooperative, except for maybe the most important fact of all, that you were at the murder scene with the victims just minutes before they died.
That's prosecutor Creighton Waters bringing home the point that for 20 months, Murdaugh said he was never at the dog kennels the night of the murders, which is where the bodies were found. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Madison and Carol.
All right, Nancy, thank you so much. Bloomberg Business Week, we are brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to see if your small to medium-sized business qualifies for a payroll tax refund. If your business was impacted by the pandemic, this is your opportunity to take control of your business's future. If you want to learn more, just head to getrefunds.com.
And as we know, it's February, so it's Black History Month, and every day of the month, we're celebrating significant moments in U.S. Black history. So here, with your installment for Friday, February 24th, is Bloomberg's Justin Milliner.
On this day in Black history in 1864, Rebecca Lee Crumpler became the first Black woman to receive a medical degree. Dr. Crumpler's first influence was an aunt who, despite little formal training, served as a doctor in the community. By 1852, Dr. Crumpler decided she too wanted to spend her life helping people who were sick. She got accepted to the New England Female Medical College and graduated in 1864. After that, Dr. Crumpler began practicing in Boston, focusing on black women and children. She took her practice to Virginia following the Civil War to treat freed slaves who were less likely to get medical care from white doctors. And a lot of this work she did for free. She authored a book of medical discourses in 1883, a work focused on medical care for women and children. Today, Dr. Crumpler is remembered as a pioneer, both in medicine and as a published author, breaking ground during a time when few women and people of color were able to do either. That's Today in Black History. I'm Justin Milliner, Bloomberg Radio.
All right, Justin, thank you so much. You are listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Maddie Mills. Keeping an eye on the markets. We're going to head over to our TV colleagues in just a moment. We've got stocks definitely working their way up towards their best levels. In particular, the S&P 500 looks like it's at its highs right now. And, of course, we're seeing yields just come off their highs of the session. Anyway, let's head over to our TV team. Let's do our cross-platform coverage. Countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left to go here on this Friday afternoon trading session. Romaine Bostick alongside Katie Greifeld, joined right now by Carol the Professor Massar and Madison Mills, in for Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, Bloomberg Originals too, as well as those folks who for some reason are streaming on YouTube. Carol, lagged effect or no
Don't make
effect.
fun of our YouTube audience. We love them.
I love all 6 of those folks, and I am curious.
Wait, are you talking about TV or YouTube?
Zip it, Carol.
I think we got 1,200 viewers on YouTube right now, if I'm looking at the chart right there.
Let's talk about the
I'm just
markets.
happy to be here.
Welcome back, Katie. We missed you. All right, so let's talk about what's top of mind for you, Romaine.
I have nothing.
Okay.
No,
Well,
nothing's happening.
PCE, yields, the stock market, come on.
All right,
Well said, Katie.
Having said that, I do feel like the equity market's bouncing around trying to make sense of it, or maybe just being like, all right, we got it. We understand we're going to have higher rates. Certainly that inflation print reminding us. I'm going to go to some mega underperformance again that's been consistently underperforming throughout the day. It actually started in Asia overnight, and that's Chinese name in particular. Chinese technology stocks took a beating. Hang Seng erasing all of its gains for the year. Then we've got the NASDAQ Golden Dragon China Index down almost 4% as we speak. You had Alibaba, it's down more than 5%. Analysts cautious about its sales growth prospects. You also had NetEase down about 5.5%. They had a profit miss. And then JD.com, remember beginning in the week, they kind of started all of this off, basically, beginning a campaign to kind of fight back against one of its rivals, basically a price war. That stock's down about 4%. So that's where we're seeing consistent underperformance today, Maddie.
Yeah, and it's all about the PCE data we got this morning, right? Let's look at what's going on the income side here. We're all watching this. We know by now it wasn't good news for the Fed. We're talking wage gains, largely driven by Social Security payments. We knew there was going to be a big COLA coming, and you can see the impact of that. That's that white bar there, a 9% gain in Social Security during the month, and that's also supported a gain in the savings rate, which went up 4.7%. That could be because of those Social Security payments causing some more savings. In January, you always have to take it with a little bit of a grain of salt because that's when we get COLA adjustments and raises, of course, but these numbers are really stark here, Romaine.
Well, that's a big part of the reason why we saw so much agita in the market. The good news is we are well off the lows of the day, but still firmly in the red on the day and on the week. And S&P 500 below 4,000. A little bit earlier, it was actually testing that 200-day moving average. The NASDAQ did actually drop below its 200-day moving average. We'll see where it closes out here over the next hour. Down 1.5% here on the day. The relative outperformers belongs to the Dow Jones Industrial Average and the Russell 2000, which are only down less than 1%. Maybe a reflection here of some of that buying of cyclical stocks that we had seen prior to the big sell-off this week.
And if you drill down to the sector level, there is some green to be found. You can see materials leading the way. They're up about 0.6%. Utilities also a little bit higher, as to are the financials, maybe benefiting from those higher rates. But aside from that, I mean, it is a sea of red. 8 sectors posting losses right now. At the bottom, it's who you would expect. It's the tech sector down about 1.6% right now, Romaine.
All right, we look at some of the individual movers. Most of the big cap tech names still remain in the red here on the day. Microsoft down about 2%. Moderna, which we talked about yesterday after the bell, down 5% here on the day. A lot of concerns here about how it continues to monetize what had been a very successful rollout, of course, of the COVID vaccine and the technology behind it here. Block, the company formerly known as Square, doing pretty well today, up 5%, really bucking the trend here on the back of those earnings yesterday. And keep an eye on Range Resources. The shares had been halted. They're reopened now, up about 12%, had been up as much as 18%. This on the back of a Bloomberg News story citing people familiar with the situation that Pioneer Natural Resources is considering a bid for the company. But of course, we go back, guys, to the macro, and of course, we go back to, well, where the big moves were. It was not in the equity market. It was in the yield space here. You are still seeing yields elevated here. A 2-year yield right now up about 10 basis points on the day at 4.8%, camped out at the highest level since 2007. And think about the turnaround here, because we spent most of January with that yield drifting down, looking like it was going to maybe break below 4%. And now here we are potentially testing what could potentially be a run towards 5.
Which all, makes us wonder about the Fed's goal to get inflation back to 2%. And it does seem like it's going to be a bit of a struggle. And the Treasury trade certainly catching up to maybe the difficulties of that, if you will. Mohamed El-Erian, Bloomberg opinion columnist, used to be CEO of PIMCO, former advisor, too, of Allianz. He actually caught up with Jonathan Ferro earlier on Bloomberg TV and was addressing the difficulty of that, and that maybe it's a little bit of a credibility problem, too, for the Fed as it continues to stick to 2%. Here's what he had to say.
I don't think 2% is the right target for this economy. And that's why a longer-term view is important. There's a lot of things going on the supply side that would argue for a slightly higher inflation target. Now, of course, the Fed cannot change its inflation target after missing it for so long. So they have a real problem there. I think the best we can hope for, honestly, is stable inflation at 3 to 4.
All right, Mohamed El-Erian, Bloomberg opinion columnist, as we know, there with Jonathan Ferro earlier. But he does say that 2% target.
Yeah.
He says, I don't think it's the right target for the economy.
Well, and he's not the first one to say that. There are a lot of people that said that maybe the Fed needs to reevaluate this, but a lot of people also making it clear they don't think the Fed will do that, at least not now, because that really would sort of put egg on their face. I do want to get to the point, though, too, and we were talking in the television program a little bit earlier about this paper that's been making the rounds about a potential 6.5% terminal rate. And it kind of gets to the same idea, I think, that El-Erian's talking about, which is that if you really do want to destroy inflation, maybe they haven't been aggressive enough, which is kind of a head scratcher, but that seems to be the opinion right now.
And maybe, just to stay in hypothetical land, if inflation is truly structurally higher, if 2% isn't really realistic to get to in any timely fashion, if we do settle around 3 to 4%, what does that mean for the neutral rate?
Maddie, it's a hypothetical. You know what would make, by the way, what would make this simulcast so much better? If we had a bartender in the background just making drinks, right?
Wouldn't that be great, Romaine? Romaine and I had that lovely experience on set recently. It was very fun.
Where was I? What?
No, you weren't invited. Next time.
Next time.
Katie,
next
you've
time.
had wine.
Yeah,
She was skiing with her cat somewhere.
Yeah, that's
Who
true.
knows where.
No, Mike McKee joined us at the top of the broadcast. He's there at the Chicago Booth School event here in New York City with all those Fed speakers, talked about the importance of that paper. And he says, the Fed gets it in terms of what's going on. He said it's just a point that the markets have to play catch up. The markets ultimately meet the Fed. It's something we have talked about a lot here in our simulcast. So, and maybe that's what we're finally ultimately seeing when it comes to the trade.
And McKee specifically talked about Peter Hooper's comments in that big paper saying exactly what you said, Carol. The Fed gets it, but does the market? That's the big question.
All right. Do you all believe 2% is going to happen?
I have no opinions.
At some point in the future, 2% will happen. How
in the
about that?
grand
How's that for a
fullness
bold
of
call?
time, inflation will be transitory.
There you go. I don't know. I gotta think about this one. All right, we're gonna come back in less than an hour's time. Radio, TV, Bloomberg Originals, and of course on YouTube. We love you all on YouTube. We're gonna count you down to the close on this Friday with Beyond the Bell, 4 p.m. Wall Street time. All right, speaking of pain, we know the strong dollar has created a lot of pain across global markets. We talk a lot about the dollar, its impact on earnings, on emerging markets, and so much more. This as the U.S. currency has been on a global rampage since the Fed started hiking interest rates. Now some of the world's biggest investors are saying, Maddie, we talked about this, that the U.S. dollar's reign is finally over. So now we have to figure out what this ultimately means and what this means for global markets.
Yeah, it's absolutely critical, and we've got an amazing voice on our program to talk about this. It's among our most read on the Bloomberg. It's today's Big Take. Here to discuss is Liz McCormick, Chief Correspondent for Global Macro Markets, joining us from Zoom here in NYC. Liz, thank you for being here with us. Tell us about just the status of the dollar. Give us the big context here.
Yeah, so my colleague Ruth Carson, like you said, had a great big take today that, there's a lot of investors, and of course today was a crazy day, right? This hot data you've been talking about, and yields went up and the dollar went up, but all that noise said, that investors are really, a lot of them leaning into that really, huge high we saw last year in the dollar is just the peak, that things have gotten more in line. Other central banks are tightening as fast as the Fed, that maybe we've seen the worst of it. And like Carol said, that it's been a lot of pain for a lot of folks, the strong dollar. So maybe, noise aside, the worst of the dollar strength is over. That's the theme that people feel.
Liz, how much of this is just what's going on with the Fed and the expectations that, okay, we know the Fed's on its, fight against inflation. We're going to see some more higher rates. It's going to go on for a little while. But ultimately, we're starting to see the end of the Fed's rate hiking cycle. How much of that is impacting the dollar at this point?
Well, I think that's a lot of it, right? Like we said, when there's some noise and hot data, it moves around. But, I was talking to a fund manager yesterday, Carol, and kind of asked him the same exact thing. And he said, yeah, a lot of it is that the Fed's maybe closer to done, but then he was leaning, and we're not seeing that yet, into that, the Fed's closer to done, and all this tightening, which, as we know, has a lagged effect. He sees a recession coming, be it at the end of this year, early 2024, and that the U.S. is going to weaken sharply, and that's going to be bad for the dollar, right? So I think it's the global macro outlook, and, things globally have gotten a little better than they were, right? Europe has done a good job at replacing Russian energy sources, right? And so that was better. China has reopened faster than some thought. So kind of things are helping the other currencies, as of course the dollar's always against a pair, right? And then the factors we're talking about with the Fed and maybe a U.S. recession coming faster is kind of taking the dollar down.
Well, we just got this paper from investors saying that we should go up to potentially a 6.5% terminal rate. I have to wonder, and I'd love for you to help me understand this, Liz, if we're going to get a higher terminal rate, why does that not mean a stronger greenback? How have we already reached the peak then? And what are you and the people you speak with thinking about that?
Well, Maddie, that's like the $1 million question. People saying, where's the terminal rate, right? So I saw that paper. It was great. They're saying 6.5. We've had some people on TV and on the radio saying it could be higher. But there's a lot of people saying, listen, the Fed's probably, going to get to 5.25, 5.5, and maybe just stay there for a long time. So I think the jury's out from economists, investors, of actually really how high does the Fed have to go? I think, in fact, Ruth had it in her story, one investor we talked to that said, listen, I don't think the Fed's got to get to 6%. Those were his exact words. I'm forgetting his name right now. But that some people think that 5.5, I mean, think about where we were about a year ago at 0, right? 5.5, they've done a lot of tightening. So I think that's why they stepped down from 50 to 25. And of course, had gone from 75 to 50. That I don't know. That's the big question, that maybe the Fed doesn't have to get to 6 or 7. And if they get to 5.5 and stay there for a year, that may not be enough to keep the dollar stronger relative to its global peers.
Liz, I think the person you're talking about is Eric Stein, Chief Investment Officer of Fixed Income at Morgan Stanley Investment Management, who said the Fed says they're going to get inflation to 2%, but in reality, I'd say they get more to a level of like 3%. I don't think that they will continue to push rates to 6% just because of that. Can I ask you something? You understand these markets and the Fed really, really well, and investor sentiment. Does the Fed, can they come back now and say, yeah, we got it wrong. It's not going to be 2%. Like, how do they do that? How do they unwind? Or does it really matter? Can they continue to stick to 2%, even though markets maybe see something ultimately a little bit differently?
Well, I don't think, and we have Mike McKee on, who's our expert on the Fed.
We talked about this.
Yes, I don't think that they want to come out and say that, especially now where they're really talking. We had one of the Fed officials today talking about we have much more credibility. So I think if they decide to gotta say, well, we're at 3%, that's pretty good. I think for now they're going to keep talking that, we're still on course to eventually get to 2%. Like I think it was Romaine in your previous segment was saying, eventually we get to 2%. But I don't think they want to lose that credibility. So maybe at some point, we know a lot of people have said that. I think Mohamed Al-Arian has talked about that going for 2% is just not the right number. But like you said, they've got to be very careful because so much about the Fed winning on inflation is credibility, the market believing they'll do what they say. So, I mean, that might be a big rethink, but I suspect they want to get through this year before they even kind of flick at that they're thinking about that, thinking about that.
Yeah, exactly.
Well, I just have to wonder, too, about the Fed's ability to achieve that goal with the tools that they have. I mean, we would all love for inflation to come down, Liz, but can the Fed do that with the tools that they currently have at their disposal?
Well, it's funny that one thing, an investor said to me, and I always love when they bring something up because they're supposed to be smarter than me, and they are, but I'm not asking them
I don't know if they are, Liz.
Yeah, well, at least they say, well, Liz, by the way, and one guy said to me, an investor, listen, Liz, rate hikes are one thing, but I'm really worried about the quantitative tightening, which we've kind of forgotten about, which is the Fed rolling off its balance sheet, which is at full speed now. And, what if that does continue on for another year or so, like the Fed would like? There's some saying if the Fed, of course, has to eventually cut, they'll stop that. But so you do have these two tools going. The rate tool is the most blunt. Chair Powell's made that very clear. But they also are pretty quickly trying to bring that balance sheet down. So there is a lot of tightening in the system. And like you said, none of us feel too good. My vegetables are still more expensive than ever. But eventually they should get there, we hope, to bring down inflation.
Hey, Liz, when you look at the trade, especially in the Treasury trade over the last couple of weeks, it does feel like investors have gotten religion to some extent in terms of what the Fed officials and FOMC members have been saying. So what do you think our audience has to kind of note when it comes to that Treasury trade? I mean, right now I'm looking at a 2-year note. It's off its highs of the day, but we're still at 4.8. What is it that they need to understand about the action that we've seen over the last week or so?
Well, it's interesting you bring that up because we were looking, because like you said, this month has been brutal for bonds, right? The yields just took off. Remember how January was also the everything rally. Everything rallied, including bonds. And I remember one investment manager saying to me, it was like January 25th. Well, if we could stop the year now, I've had a great year, But unfortunately, it doesn't work that way, right? But so I think, remember all the street analysts called this the year of the bond, right? Things are better, yields are better. So I don't think we want to write that off yet. This was a brutal beating this month. Rates are very high, like you said. But what if it does prove the Fed gets to 5.25 or 5.5 and stops, inflation starts to come down? 6 months' time, things could be looking better. So I don't think a lot of people who are bullish on bonds are willing to give up. They're kind of willing to basically take the pain for a while. That may not be true if this keeps up for another 3-6 months. But for now, I think the bullish bond people are saying, okay, yeah, I'm not doing so great now, but I do think it'll be better. I'm making some decent income. I don't think Fed's going to 6%. They're in that camp, so we'll see.
Really quickly here, Liz, the thing that I would love for you to help me be smarter on is the Fed updating its basic model of understanding. In 30 seconds, can you tell me, do you think that update was enough? Do they understand our current economy?
Well, that's another $1 million question. Let's talk about their update on what they think the neutral rate is, kind of that standard base rate where they're not adding stimulus or removing it. And they haven't updated that yet. And a lot of people think it's higher now. So the Fed's long run rate is like a 2.5. People in the market think, like you're saying, it's a different world now. That might be higher. So that could be a game changer. So there are some questioning some of the Fed's models. The jury's out on who's right or if they adjust, but it's an open question.
Yeah, there's a lot going on, and certainly for the Fed to have to kind of figure out. Liz McCormick, you always figure out so much for us here. So appreciative. Liz McCormick, she's chief correspondent for global macro markets at Bloomberg News, joining us via Zoom in New York City. Yeah, I think she's probably smarter than a bunch of people.
I think she's smarter than a lot of people she probably interviews.
No doubt about it.
Yeah.
Check out her stories on the Bloomberg terminal. You can find them at Bloomberg.com. You can also check her out on Twitter at McCormick Liz. All right, you are listening and watching Bloomberg Business Week. Carol Massar along with Maddie Mills, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We've got the Dow, the S&P, NASDAQ, all trading lower. We check the markets all day long right here on Bloomberg. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks off their session lows, but still under pressure after the hot inflation data. Dow's currently down 266 points, was down 500. S&P's dropped 38, while NASDAQ is down by 190. The U.S. 10-year yield at 3.94%. Gold is down 10. Energy is in the green. And Bitcoin is down by 2.7%. Of the main 11 S&P sectors, only materials, utilities, and the financials were in the green. And leaders to the upside in the Dow, JP Morgan and Dow Inc., while Boeing fell 4% and led to the downside. After earnings, Autodesk fell 13%. And in deal news, in the energy space, Pioneer is set to weigh a deal for Range Resources. In other news, Merck's COVID-19 pill gets a negative recommendation in the EU. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, you are listening to Bloomberg Business Week, watching us as well on YouTube, on Bloomberg Originals, and of course on Bloomberg Radio. Carol Master along with Maddie Mills. BofA came out with a report last month.
They did, and it was about our favorite topic here, Carol Master, digital currencies. We thought maybe with Sam it'd be going away, but it is not. Some might say it's hard to imagine this report from Bank of America saying that central bank digital currencies, otherwise known as CBDCs, along with stablecoins, are the future of money and payments. But alas, here we are.
Especially, there we go. There's my mic. Especially after, the carnage that we've seen, right? Especially in the latter half of 2022. It's interesting to see that report. So let's get to it. We have a good guest in our weekly look at the world of cryptocurrencies. Joining us once again, delighted to have him back, Tony Saliba. He's founder and CEO of Liquid Mercury. They work with Coinbase, Kraken, CME Group, and more, and he joins us via Zoom from Chicago. Tony, good to have you back here on Bloomberg Business Week. Do me a favor, just set the stage, remind our audience about what you all do at Liquid Mercury.
Hi, Carol. Thank you. Liquid Mercury delivers institutional technology for traditional finance, Wall Street, if you will, and for crypto natives to trade all range of digital currencies. We have a product that we're partnered with Gemini with for individuals. So we're a fintech company that focuses on everything digital currencies, digital assets.
So it's the actual platform, technology, advice, or all of the above?
Just technology, and the platform is technology. We do training and options because we're options people, and crypto options are coming to the U.S., but most of our clients doing crypto options are non-U.S.
Okay.
But no advice, really, just fast, best execution.
Okay, so I can tell by your background that you're doing great, but Tony, I have to bring up some of the scary aspects of crypto from this year. We've got Gemini, you mentioned, you got fintech, some scary words there. Where are you at right now with crypto?
Well, so one of the things I've learned, I've been in the crypto space for about 6 years, and one of the things I've learned is that after 40 years in traditional finance, cycles are much faster in crypto. And the scam, bankman, fraud, as I like to refer to it, announcement of November.
And to be fair, that's your opinion, and they're still exploring it and investigating it.
That's all just my opinion.
To be fair, yeah.
Right. But clearly there was some problems, and that caused a lot of issues that rippled throughout the industry. Prices collapsed in a lot of respects, and most of them have rebounded at least 50% off of the lows. For our business and businesses like ours, there's been a little bit of delay in terms of closing deals and onboarding and things, but nobody said, that's it, I'm walking away. In fact, topic, as you mentioned, the CDBCs are definitely top of mind of everybody because they're moving forward. The bank, Bank of Japan just announced night before last that they're moving forward with theirs. So yes, it is. As much as I hate to say that the central bank digital currencies is the cash of the future, it's pretty much a fact.
Okay, but why do you hate to say that? Because it's really interesting because CBDCs, if I'm correct, they would still be pegged to the dollar, right? Is that why you're not a fan?
Well, no, I'm cautious because it's coming from the government and from central banks. Where,
right, that's not very crypto worldy.
Yeah, and it's really, ladies, it's the issue of privacy, right? So right now, people know that they can put money in a vault or in their mattress if they so want to, if they're afraid of other things. And that really won't be the case so much with the central bank digital currencies. And I'm just giving the worst case scenario, right? They'll be able to track your purchases. It could get political. It could get social,
but they already do. They already do, right? It's just like, electronic money in a bank account, using cards, smartphone, right? I mean,
well, yeah, absolutely. But this will become much more absolute. Right now, forever, we've all known we can't take more than $10,000 out of the country without letting the feds know about that. That number's been the same for 50 years. Clearly, that is an infringement on some levels of your privacy, of your own freedoms. But with the CBDCs, it becomes more absolute. They could turn you off, your buying power off, should you violate some heretofore unknown set of rules that they may come up with. It's just another link. Now, having said that, I think companies like ours will come up with solutions that'll try to help break that chain and allow you to have a little bit more freedom. That's the only ominous aspect of this, ladies. I think generally it is going to make currency much more efficient. I think it'll become more ubiquitous. People will learn how to use these sort of apps much faster. But
because isn't that kind of, Tony, the whole point? Like it would make it maybe more efficient, right? Cut out the intermediaries, and bummer for them, right? In terms of their industry. I'm not making a call here or anything, but I mean the point is efficiency and transparency and clarity, and would also mean that no funny agents, right, can do something. Like it would be much more clear, hopefully. And I feel like it just takes the existing system up several notches.
Right.
We are already in a digital world. Yeah.
We started with the only possible worst case scenario, but you're absolutely right. This makes it much more efficient. I think regional banks,
like things could be settled faster, right? Like think about that. Maybe more cheaply. Like there are benefits.
Totally. Anybody tried to do a wire transfer lately? The charges are really outrageous. It takes 3 days or whatever. So, this is definitely a positive. Like I said, we landed on the one square on the board that maybe private citizens should be concerned about. And when you work backwards from there and everything, I think is much more positive, much more modern, much more efficient, and definitely cost effective.
Does potential regulation from Washington change that calculation for you at all?
Well, it does in that they dictate to the central bank, so it'll be, their rules that, we adhere to. I think we're all kind of waiting for more guidance in the U.S. on crypto in general, which would be very helpful, so we could, sort of lay out the white lines on the playing field and know where everybody's safe, rather than deal with, regulation by enforcement, which is what's happening. Oh, you stepped over the line, taking you down, versus, oh, you're fine because we've defined the rules. I think those are coming, hopefully this year, actually.
So net, Tony, good idea, bad idea? You've laid out nicely the pros and cons, and we've had this discussion, I feel like, so people are getting kind of both sides here. Is there a net takeaway for you in terms?
Good idea. Net, good idea. Net, I'm an optimistic person, and I'm hoping that the positives will far outweigh the one, cell on the board playing a surface that we don't want to land on is sort of shuffled into the background. But there are definitely some privacy concerns we all have to be aware of. Now, having said that, as long as people, your audience for sure is enlightened, know those pitfalls, we go in with eyes wide open and try to embrace the new technology and make the most of it.
Is it good for the crypto diehards? Like, does Bank of America give them, yay credibility, or is it, that's institutional?
No, I think it does. I think it's good for it. Apparatus like ours is going to be used for both. So that definitely puts a floor under that for the players that are in there today. Purists will say, oh, it's too centralized, but you don't have to play. You can take your money out of the bank, buy ETH or Bitcoin or some other popular token to utilize and trade with and be sort of outside of the orbit in that regard. But generally, I think it's going to be enlightening for everybody.
All right, gonna leave it there. Hey, Tony, have a good weekend. Thanks. Tony Saliba, he's Chief Executive Officer, founder of Liquid Mercury, which, as we said, works with Kraken, CME Group, and more, joining us via Zoom from Chicago, just as we continue to find out more and more.
The crypto world, it's always something.
All right, let's get back to world and national news. Nancy Lyons, she's in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Carol. Well, today marks a year since Russia invaded Ukraine, and U.S. Secretary of State Antony Blinken says it has come at a real cost to Ukraine.
Russia has killed tens of thousands of Ukrainian men, women, and children, uprooted more than 13 million people from their homes, destroyed more than half of the country's energy grid, bombed more than 700 hospitals, 2,600 schools, and abducted at least 6,000 Ukrainian children, some as young as 4 months old.
Blinken spoke at the UN today and says Russia has violated UN norms. More battle tanks are headed off to Ukraine. Poland says its first 4 Leopard 2 tanks are arriving today, but Ukraine continues to push for fighter jets. Yuri Sak is an advisor to Ukraine's defense minister.
We are pushing for the fighter jets on a daily basis. Our Minister of Defense, our President, everyone from the political and military leadership. And we understand that these are sophisticated platforms that require the training of pilots, the training of engineer crews, they require logistics. So it's not going to happen overnight.
Ukraine defense advisor Yuri Sak tells Bloomberg jets will be instrumental in achieving victory. California's Bay Area is seeing something rarely seen in the area: snow. Over 100,000 customers are without power as a West Coast storm continues to pummel the region. Shankar Krishnan lives in San Francisco and sees the upside.
It's like a winter wonderland. It's like the trees are all frosty. There's snow on the ground. There's snow coming down from the sky. I saw somebody jump out of their car and they were like jumping up and down and cheering for snow. It's beautiful out here.
As much as 5 feet of snow may fall in some of the mountains near Los Angeles. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg with the Dow, the S&P, NASDAQ, all in the red. Wall Street's reaction to hotter than estimated inflation data suggests growing bets that the Fed has a long ways to go in its aggressive tightening crusade. We've got the 10-year at 3.94%, the 2-year 4.80%. That is the highest since 2007. S&P down 1.3%, down 51 points. The Dow down 377, down 1.1%. NASDAQ down 231, a drop there of 2%. 19 minutes to go ahead of the closing bell. Gold down 0.6%, $18.11 the ounce, and West Texas Intermediate crude up 1.5%, $76.51 a barrel. Former Treasury Secretary Larry Summers says worrying signals of a potential sharp drop-off in activity, combined with strength in other indicators, point toward an uncertain economic outlook. He spoke with David Weston on Bloomberg Wall Street Week, where he discussed the latest minutes from the Federal Reserve.
Those minutes were superseded by history in terms of the strong CPI print, the incredible job market creation, and the retail sales. So I don't think there was anything much informative in them.
And to hear the full interview with Larry Summers, tune into Bloomberg Wall Street Week tonight, 6 p.m. Wall Street time, right here on Bloomberg Radio. Ford extending the shutdown of its F-150 Lightning pickup plant for a fourth week. Ford shares down 1.7%. A booster dose of Johnson & Johnson's COVID-19 vaccine provided 100% protection against severe disease when given 2 months after the first introduction. J&J down 1.2%. And sources tell Bloomberg Pioneer Natural Resources is considering an acquisition of Range Resources. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Friday. It is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. This refund is not alone and could help your business weather rising inflation and supply chain issues. Learn more, just head to getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about 16 and a half minutes left in today's trading session, getting ready to wrap up what's been a holiday-shortened trading week. Remember, we had a long weekend, so just Tuesday through Friday. Carol Master along with Madison Mills. And Maddie, we're looking at an equity market that has definitely been bouncing around. We're off our highs and lows of the session, and this is once again a day where we've seen yields move up, and this is once again on a hot inflation print.
Another red-hot inflation print this morning in that PCE. It's interesting. I loved this data point that Abigail had earlier today. She was showing kind of some of the sell-offs that we've seen over the past week from Bank of America. She showed us, I think, $9 billion in U.S. stocks, and then even $4 billion sold off in the U.S. dollar, all going into the bond market. So that really feels like the big focus right now.
Yeah, I mean, this is what we love to do, is watch where the money flows. And specifically when investors are a little nervous, worried about even higher rates for longer. And this has certainly been what the message has been from the Federal Reserve and Fed members. Mike McKee talking about him. He's at an event here in New York, and we're continuing to hear where they are saying inflation needs to get under control. We're sticking to that 2% target. Then as a result, rates, we're going to continue to see the markets at this point still pricing in quarter-point moves for the next 3 meetings, no doubt about that. They've been really kind of getting rid of that thought and market expectations that we could see rate cuts this year. That's moving into 2024. And so as a result, result, you've got investors thinking, okay, what can I yield, or what kind of yields are we getting in the Treasury trade versus what we see on the equity side of things, where there's some risks in terms of corporate profit growth, in terms of pressures on margins. So that's why you continue to see, or increasingly are seeing, investors move into the Treasury trade.
Yeah, and I love, Tom McKee put it really well in one of his commentaries on surveillance this morning. He was saying, what's the lesson from the bond market, from Treasuries for equities? And I feel like that's the big question right now. I know we've made this joke all the time about, is the bond market smart and equities are dumb? It feels also, though, like there's not a lot to predict right now because so much is moving around. Even, it was so interesting, the Macro Man column from this morning, he basically, the headline was like, soft landing equals no landing.
Well, this is the tricky part, and it's funny as we talk about with our TV colleagues in our simulcast, this whole idea of, targets by the Fed, and, I've said it a million times, and I mean it because the Fed will tell you too, this is not an exact science, and they can set out projections and targets. They have, repeatedly said we are data dependent. When we go into any Fed FOMC meeting, we are going to look at all of the data points up to that point and make a decision, and that's ultimately what we see. Having said that, we talk to a lot of investment professionals that are making investment decisions on a daily basis for their clients, and one of them is our next guest, our Drive to the Close guest. He's Charlie Massimo. He is back with us, Senior VP and Financial Advisor at Wealth Enhancement Group. They specialize in planning for families impacted by autism, so they do have to think about those long-term investment needs. He is joining us on the phone from Washington, D.C. Charlie, good to have you back on Bloomberg Business Week with myself and Maddie Mills. Tell us about this environment. Is it making it more difficult for you to figure out how to place bets? Are you increasingly moving money into shorter-term investments and cash to kind of ride it out?
Yeah, well, thanks for having me back, Carl. I think for many consumers and investors, this is a very difficult time, but it's a necessary time. I think no matter what has to be done, we need to get inflation under control. And you're talking about data. The data just seems to be somewhat inaccurate and changing all the time. But to answer your question, absolutely. A couple of years ago, 4% bonds, for 10 to 20 years look pretty enticing. But now when you have a 1-year Treasury bill paying over 5%, it makes absolute sense to cut your losses on the long term, bring them down into the short, and try to eliminate as much risk as you can, especially for those people that are in or nearing retirement.
Right, you get that yield and you get liquidity at the same time.
Yeah, you're just taking risk off the table, and I think for most people, they just have to take as much risk off the table without making major changes to their overall allocations.
Can I ask you a question, Charlie? I was just mentioning that our Macro Man had a column this morning saying that a soft landing is actually just a delay of an inevitable hard landing. Can you give me your perspective on that?
Well, I think that's fairly accurate. I think a lot of the talk you're starting to hear now is that they want to get more aggressive with raising rates instead of this 25 basis points at a time. Because what you're finding, until you can change consumer behavior, you're really not going to bring down inflation. And what I mean by that, people aren't really feeling a lot of pain yet. People are still, buying homes with a 5 to 6% mortgage. They're still buying cars. They're still taking luxury trips. But when mortgage rates go to 8%, when borrowing for a car goes to 12 or 13%, that's when consumer behavior is going to change, and that's when we're going to start bringing down inflation. So a soft landing may be very difficult because, again, I think we're at a point we're going to have to get much more aggressive in raising rates.
Yeah, I mean, just look at the data points. New home sales surged to a 1-year high. A lot of it was, buying in the South, but that was a pretty strong number. And when we talked with our Mike McKee earlier, you had income up, you had spending up, and you also had personal savings up, which is really interesting. And sentiment is up. So you've got that along with those inflationary. It's interesting to see individuals kind of holding up. Charlie, thank you so much. Have a good and safe weekend. Charlie Massimo, he's Senior VP and Financial Advisor at Wealth Enhancement Group, joining us on the phone from Washington, D.C. It is just such an interesting set of data points, Maddie, that we continue to get.
Yeah.
Consumers still feeling kind of good, and they're out there spending, and they're buying homes again.
Yeah.
And yet inflation, it's continuing to be very persistent.
It's continuing, and I am so interested in that number in PCE about savings going up, too. That tells me that consumer is just so resilient, and I wonder if That seems pretty bad for the Fed.
Spending and saving at the same time. Like,
Right.
go figure, right? All right, folks, just about 10 minutes left in the trading session. We're going to continue to track the markets, count you down, wrap up the day, wrap up the week. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 on Wall Street. Sources tell Bloomberg Pioneer Natural Resources is considering an acquisition of Range Resources. Now, those sources say the Texas-based oil and gas explorer is weighing a deal for the smaller rival as it seeks further consolidation in the shale industry. Shares of Pioneer Natural down 4.5% right now. Range Resources up by 12.5%. Ford shares are lower today, down 1.6%. Ford Motor is extending the shutdown of its F-150 Lightning pickup plant for a fourth week. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, Ford is working to resolve a problem that caused a battery fire in one of its electric trucks. The automaker says the Dearborn, Michigan factory will remain closed at least until the end of next week now, while its battery supplier changes how it produces the power cells at a plant in Georgia. The Lightning is Ford's signature signature plug-in vehicle as it moves to electrify its lineup by investing $50 billion to develop and build 2 million battery-powered models a year, it hopes, by the end of 2026. Charlie.
And that's Denise Pellegrini again. Ford shares down 1.5%. Goldman Sachs has approved a new share repurchase program authorizing as much as $30 billion in stock buybacks without giving a timetable. Goldman shares little change right now, down less than 0.1%. Booking Holdings after earnings up by 1%. Those are some of our company stories. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Yay, it is Friday.
Yes, we're almost there. We're almost there.
Tim, we know, is on leave. Of course, you're listening to the voice of Maddie Mills, who has been with us all week, breaking it all down. And I don't know. We've seen a bunch of stories come out when it comes to, we talk a lot about AI, we talk a lot about ChatGPT. It seems like the Wall Street banks are pushing back increasingly.
Yeah, we've got JP Morgan restricting staff use of ChatGPT earlier this week, and now we've got Bank of America, Citi, Deutsche Bank, Goldman Sachs, and Wells Fargo. It's like a laundry list of banks banning or at least restricting usage.
I'm not surprised, right? I mean, listen, coming off the financial crisis, the regulators cracked down on how traders communicate and the oversight, right, to really make sure that everything was on the up and up. So this is just another one of the apps, right, that basically, you know, banks are being like, just be careful, like where you're having conversations, right? Because they need to be transparent. There needs to be records of stuff.
That's fascinating to me because I still feel like I don't quite have a grasp on, like, it seems like ChatGPT is an extension of Google, so why is it that big of a deal? But I understand it's not the same.
Well, that's a good point.
Yeah.
Right? I don't know. Maybe they're concerned that people are going to be writing stuff or...
Well, I think you bring up such an interesting point that it could be about just like skittishness around regulation, and this is a new technology. Let's just not let people get into this at the moment until we know a little more.
Apparently, I guess when they added kind of ChatGPT as I guess one of the things that they want oversight on, they've talked about in internal meetings that new technology must be vetted before it can be used in business communication.
All right, well, they're being careful. I applaud them.
This story, by the way, is the third most read on the Bloomberg today, so we're definitely seeing it gain lots of traction. I just want to go back quickly to the markets. We're bouncing around here on the equity side of things, but it does look like it's going to be, I think, a down week, no doubt about it, for the S&P 500. The big story has been those inflationary concerns, which certainly reared their ugly head once again with that PCE core number, and you saw yields kind of moving up. So, yeah, that's our story. We've talked about this a lot.
We've talked about this a lot. Yields moving up, stocks moving down. I mean, the markets are just maybe getting in line with the Fed. Maybe that's finally happening.
And Tesla investor Gerber to withdraw his activist board seat bid for that company. We talked about it with him. That just crossed the Bloomberg. All right, time to head over to our TV colleagues beyond the veil. It starts right now.
In the meantime,
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, radio, and Bloomberg Originals, as well as for those folks streaming on YouTube. And Carol, we're going to get to the stock market news of the day, but we do want to get back real quickly to some breaking news here. This on Tesla. Ross Gerber, who had been seeking, or said he was going to seek an activist board seat on Tesla's board, now saying that he's going to withdraw that bid. Gerber saying that he did speak with Tesla this week before dropping that board pursuit. Tesla, in his words, or a source is telling us that Tesla plans to address some of the issues that he had, including succession planning with regards to Elon Musk.
Yeah, absolutely. We've talked with Ross Gerber several times here on our broadcast about that pursuit of his. Listen, Ross Gerber has been out there like a Kathy Wood, supportive of Tesla, the company, supportive supportive of Tesla, the vehicle, and supportive of Elon Musk generally. And so when he initially said he was going to go for a board seat, that was quite an eye-opener for everyone. Keep in mind that the company has agreed to meet with Gerber next week around Tesla's Investor Day on March 1st. That's a big day for the company, and they are going to talk about the company's governance in particular. And, you know, look at the board.
Yeah.
There are people that are certainly friendly to Elon Musk in particular, and Gerber has been a little worried about Elon being spread a bit thin.
Yeah, I mean, that might be an understatement. I am curious, because you mentioned the Investor Day here and that just the timing of this here, but the idea of sort of what an activist can do in this situation, given the current structure of their board and, of course, given the voting shares that Elon Musk himself holds.
Yeah, no, absolutely. But listen, there's been a lot of press spent around this, and a lot of people are wondering about it. And it's hard, especially since Tesla's been on a tear this year.
All right, we're going to talk a little bit more about this, but we do want to get back to the broader market as we get the closing bells here in New York. It is red all around, but we are off the lows of the day. A Dow Jones Industrial Average lower by about 336 points or 1%. The S&P 500 down about 42 points or about 1%. At one point on the day, it was testing that 200-day moving average, but it's going to close above it at 39.70. The 200-day right now sitting at 39.40. Meanwhile, let's take a look at the NASDAQ Composite, which is down 195 points or 1.7%, and it is closing below that 200-day moving average. Remember, it broke above that last month for the first time in a year. Now, closing below that. So a little bit of a downward trend line here, at least in the short term. The Russell 2000 going to finish the day down about 0.9%. And of course, we should point out the Russell and the Dow have been firmly above their long-term moving averages, as a lot of people still think there's a lot of life in some of those cyclical names.
Yeah, good point. And, you know, despite a name like NVIDIA having a great week, up almost 9% for the week overall, if you take a look at the trade here, you can see clearly the risk-off trade. Katie, you had almost 400 names in the S&P 500 lower today, so definitely a much more negative tone here in terms of sentiment.
And it's certainly risk off. If you look at some of the industry groups as well, at the top, you do have a little bit of green. The materials industry group up about 0.7%. Then you have some of the banks as well. Higher rates, that should be good for bank stocks. At least that's what you're seeing today. But then you go down the list. It's a lot of red. You have software, real estate, and Carol, you were mentioning the tear that Tesla has been on. Not so much today. That's bringing down the auto group as well.
All right, good to know. Let's get to some particular gainers, because there were a few standouts. Beyond Meat, we broke their earnings after the closing bell yesterday. That stock up at its highs, up 33%, finishing the day with about a 10% gain here. Fourth quarter net revenue topped analyst expectations. It's adjusted per share loss narrower than the average estimate. So some indications that this company was progressing toward its goal of becoming profitable. Stock's been on a tear this year. It's up about 50%, but keep in mind, heavy short, about 37% of the float is shorted. So something to think about in terms of the trade. Farfetch, also a standout, up more than 11% in today's session. It's a specialty online retailer, e-commerce marketplace for those luxury boutiques around the world. They did come out, fourth quarter revenue beat expectations, and analysts were broadly positive as the company reiterated guidance for 2023. So noting some of their partnerships that they have with Neiman Marcus and others. CFO, though, also stepping down, planning to this year as well. So some news there. And Edison International, this was topping the S&P 500, kind of plain vanilla company, a utility. It was up about 4.2% here after a fourth quarter earnings and revenue beat. So just wanted to put that one in the list as well, Matt.
And just real quickly, I'll just add another mover, a gainer, Range Resources did close up here on the day on the back of speculation here on the Bloomberg report that Pioneer Natural may be weighing a bit. Matt.
Yeah. Well, speaking of Bloomberg reporting moving the markets, I'm going to start off with Adobe here. Shares are down a little over 7.5% after that Bloomberg News report that the Justice Department is preparing an antitrust lawsuit to block the company's acquisition of Figma. Analysts, of course, seeing that deal being critical for Adobe's growth, and that suit from the DOJ could be filed as soon as next month. So really interesting to watch, and that is pulling down the overall sector today as well. And then I got to talk about Carvana, guys. Shares of the company sank as much as a little over, I think they're at over 20% in the close. Biggest drop since December 7th after they reported a much wider loss than what analysts estimated. We know the stock's been on a wild rally this year, rising more than 110% through Thursday. But, you know, they've got a market valuation of $1.5 billion, total debt of $8.1 billion, and only $316 million in cash. And then we've got Tesla down about 2.5%. That's just, tech going down today after that hot PCE data this morning.
Yeah. Pop quiz, Maddie. What was the biggest decliner in the S&P 500 this week?
I know, Romaine. Why did I not pull that up before our conversation? Because I know you love that question.
It was Moderna.
It was Moderna?
Well, it's second lowest.
No.
Domino's Pizza.
What was
Domino's Pizza.
Did you do 5 days or 4 days? Did you do a specific search here on the
It's a 4-day week.
I know.
Monday was a holiday.
Well, I did it 4 days, and I got Moderna.
Okay, well, I mean, at one point when you get to my cloud, they'll give you the real Bloomberg terminal with
My
all the real
takeaway is
pricing
that I'm
on
not
it.
wrong.
Romaine actually has future
takeaway.
pricing. It's not delayed. It's looking into the future.
All right.
All right, real quickly, let's get to the yield space because there was a lot of activity there. Your 2-year yield up 11 basis points. Just on this day alone, about 19 basis points on the week here. You add that, of course, 10 basis points last week, 22 basis points the week before, 10 the week before that. We've basically gone from about 4.1 and change to more than 4.8% here. Similar moves across other parts of the curve here. So a bit of a repricing from where we were, Carol, just a little while ago. And that really kind of sets us up for next week here. Yeah. Because we've got some earnings, mainly a lot of the retail type of companies are going to be reporting. Not a whole lot of economic data. I think we get some durable goods coming out. But I'd be curious to see what the catalyst is going to be to either move this market higher or lower.
Well, I do wonder, especially coming off of the personal spending number, right? Consumers are out there still spending, right? They're saving, they're spending, their incomes are up. So what do the retailers say, and what does it tell us about the strength of the consumer? So important, as we know, to economic growth going forward.
And it's also going to be interesting to hear commentary about what they're doing to either protect or sacrifice their margins. How much pricing power do these retailers have left? That's what I'm going to be looking for next week.
And looking at we've been talking about this, that consumer resilience, right? Whether or not consumers are continuing to just spend. And we've been talking about this too, Carol, that consumers also saving more, and as noted in that PCE data this morning.
But then we said that I know a lot of people didn't really look at the Michigan sentiment data, a revision on that, but that was also higher as well. And we're going to get a consumer confidence data out of the conference board next week. So I guess, there is an argument to be made that if the consumer is, I guess, relatively happy, or at least they're not scared away, and they have the capacity to spend, which at least for now it looks like they do, then are we maybe worrying a little bit too much?
I think it's remarkable that consumers are still spending. Considering some of the sentiment that's out there as rates go up. I mean, the home sales number, the highest in a year.
Yeah.
I know a lot of it was in the South, but nonetheless, that to me shows strength. And is that more evidence to this soft landing idea?
And are we in that wage price spiral too? Because we're seeing wages so high.
I will make the point, though, this sentiment on the ground and what we're actually seeing in the data. This is something we've been talking about, I feel like, since the pandemic kicked off 3 years ago. The fact that consumers are miserable, but they're still spending a lot.
Yeah, absolutely. I do want to get back just to a couple events for next week. We sort of alluded to it, Tesla having an investor day next week, and we had the news that Ross Gerber, at least based on Bloomberg reporting, with people familiar with the situation, is going to withdraw his bid for a board seat. And then Goldman Sachs having their investor day too. And we know David Solomon has been, let's just say, under scrutiny as of late.
Yeah, and don't forget, you've got the Buffett,
on Saturday.
Warren Buffett letter that gets at 8 a.m. tomorrow, and I do feel like I want to see what he has to say. He got out of TSM, wondering if that's going to be in it, what he talks about broad macro, if he has any ideas. So that should be on our radar, at least for the next 24 hours.
It does get back to the question, though, what is going to be the catalyst next week? It sounds like we're going to get a lot of talking, but we'll see. Maybe it's earnings.
Maybe it's earnings, but there's a lot. I mean, you talk about Target, you talk about some of the other big retailers, and then a couple of big names. You got Salesforce also reporting as well. So you do have some names that could potentially move the market here, depending on what they come out. Macy's, Nordstrom, all those department stores, Best Buy.
We're now less than a month away from the next Fed meeting.
Oh, gosh. Are we counting down to that already?
Yeah.
Okay, put up the clock.
I just love the dot plots. What can I tell you?
The dot plots.
That's what we economic types like to look at. All right, guys, that's a wrap.
Before we go.
Yes. Is it your birthday?
No. You don't know when my birthday is? Sorry, what? Some breaking news crossing the wire right now. This on Meta Platforms, learning that the U.S. FTC is going to drop its antitrust case over Meta's VR startup buy. Now, I assume we'll have to dig a little bit deeper into this, but I assume this is referring to that acquisition that it was making of the headset maker, of the software maker, excuse me, that they were trying to integrate into that headset here. Of course, we know that they had already had a minor victory in court over this, so the FTC appears to be dropping its case, antitrust case.
All right, good to know.
Yeah.
Stock is flat in the after hours, but the news continues to flow even after the market on this Friday. All right, guys, have a great weekend. That's a wrap for our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We do it all. We call it Beyond the Bell. We will see you again, same time, same place on Monday.
Someone's knocking at the door. Somebody's ringing the bell. Do me a favor, open the door. Let them in.
All right, everybody, as we have been reminding you, Maddie and myself, we have been talking a lot how it is the one-year mark since the Russian invasion and war in Ukraine. And Just Answer is a company that we have talked to over the past year. They had several hundred workers in Ukraine on the ground when the war broke out. It operates a site that connects people with doctors, lawyers, vets, mechanics, and other experts 24/7. And we're delighted to have back with us Andy Kurtzig. He is the founder and CEO of Just Answer. He's taken trips to the Ukrainian border, getting ready for another trip, taking some supplies and aid. Andy joining us via Zoom from the San Francisco Bay Area. Andy, good to have you back with us. How are you? How's your team that was on the ground? Tell us where things are.
Of course, thanks. It's good to be back on the program. You know, it's been a crazy whirlwind year. I mean, a year ago today, this war started and caught most of us off guard. And I'm feeling, you know, kind of bittersweet today. And in some ways, most people thought this war was going to be over in 3 days. And here we are a year later. So proud of the Ukrainians for their strength and bravery. And, you know, on the other hand, here we are a year later and this war keeps going on and it seems like there's no end in sight. It's been a pretty painful year for our folks.
Do you still have people on the ground there, Andy?
We do. Yeah, we've got now 316 people.
And when this started a year ago, what did you anticipate for the timeline? Could you have predicted this would last this long?
No, I mean, I think I there's no way to have expected it would take this long. You know, it's a little bit like COVID, right? We kept thinking it was going to be over and it's going to be over, and here we are a year later, and now there's no end in sight. I do think we're getting ready for another major offensive, right? As the winter is starting to thaw, and I am getting ready to head back to Ukraine again in the next week or two.
When was the last time Andy, when's the last time you went before now?
Yeah, I've been there twice since the war started. October was the most recent.
What can you, I mean, I have to say I was going through some coverage, I think it was the New York Times, and a bunch of photos from some of their different photojournalists who've been over there covering the war, and it's rough. It's very difficult to see some of the images and stuff. Tell us, because we certainly can read about it. We can, watch the foreign correspondence, but there's something about when you actually go there. Tell us about your experiences and what you saw, if you wouldn't mind.
Absolutely. Yeah, it's quite varied. I mean, some hours everything kind of feels normal, and you can walk around and you can go to a cafe and everything seems okay, and then all of a sudden the air raid sirens start going off and everybody runs to the bomb shelters and then the power goes out, the internet goes out, and everybody's is scared. So it's kind of quite volatile and quite variable.
I every time I speak with someone who's been there, it really just re-strikes me what a just indescribable situation it is on the ground there, Andy. I wonder if you can talk specifically about the mental health impact a little bit, because I know that you were involved in the foundation which funded the creation of a national mental health center operating in Ukraine. Can you talk to me about the mental health situation there?
Of course. So soon after the war started a year ago, and making sure that we were taking care of our employees, I also set up a nonprofit. And since then, we've raised over $3 million, now $3.2 million. And one of the projects we took on was building a brand new, from scratch mental health center, 5,000 square feet, designed to serve 40,000 people a year, either for free or at a very low cost. And we did that because of just the stress and the trauma and the toll this war is taking. I mean, you can imagine the PTSD of the military and the troops, but then imagine their families and imagine all the civilians that are dealing with this. war and just not knowing when they walk down the street if a bomb's going to land on them today. It's just takes an incredible toll on everybody there. And then the power is out in the middle of the night and you're not sleeping. And it's just a mental health disaster. And so we decided to step in. Nobody else was thinking about mental health. They're thinking about bombs and ammunition and all kinds of other things. We said, hey, we're going to build a mental health center. We've done that. And we're really proud of the beautiful state-of-the-art center that we built. We even hired Yale professors to train the psychologists and psychiatrists there on how to deal with things like PTSD for the troops.
Yeah, in an environment where you don't physically feel safe, you to some extent have created this mental safe zone, or hopefully to help individuals. I do wonder too, kind of how you think about this year. I do feel like, we've had President Biden go over there and really, physically send a very strong message by being there in a country that's, in a war. It certainly sent a strong message of support and so on. We have conversations about how we think this, might wrap up this year. China trying to do, a peace pact of some sort. What are you hearing? What's the conversations among your team about maybe what happens this year? Or are we just crazy to even speculate?
No, I think that's right. I think my team's predictions are that the war will end this year. I think, the winter is thawing. Spring is coming, and I think Ukraine is going to be able to make another major offensive to take back more of their country. And so that's what we're on the precipice of.
Given that, I know there's a lot of funding efforts going on, including the work you're doing, obviously from nations like the United States, President Biden going over there. I wonder if you can talk about what's not understood about what's needed on the ground, given your expertise having gone multiple times.
Yeah. So, the opportunities we've been finding, so we did the mental health center. That's something that nobody else was really funding or doing. The other thing that we've done that I'm really proud of in this last year, and then I'll talk about what's going forward, is we helped upgrade their missile defense system. Wow. So nowadays, you see the U.S. sending over Patriot missiles and things like that. But over most of the last year, they've had this old Soviet-era missile defense system that just didn't work that well. They'd see the missiles coming in, and they could try to intercept them, and they would just miss far too often. And we, with our tech guys, we went in and we talked to them, and we figured out that even though we're not military folks, we could actually upgrade their computers, get them new software, get them new hardware, get them new networking gear, set all that up for them. And just having faster, better computers, we thought might help. And sure enough, it's made their missile defense system 40% more effective at intercepting those incoming missiles over the last year, saving many, many lives.
That's remarkable.
And so,
please go ahead. Yeah, please go ahead.
Yeah. And then I think your other question was really about what's coming next. I mean, winter is thawing, and I think that getting ready for that next big offensive is the big news. Russia's getting ready to do their big offensive. Ukraine is also getting ready, and so it's going to be a very bloody next 6 months.
And I always do wonder, too, like we obviously know what the governments are providing in terms of support. We did a story about crowdfunding that has helped Ukrainian defense needs that are going on. Just got about 30 seconds. What are the conversations you're having among some of your peers or in Silicon Valley about what more you all can do? And again, just got about 30 seconds, just quickly, if you could.
Yeah, it's really about funding. I mean, it's a little bit like when you have a baby. The first month, everybody shows up with food and offering to babysit, and everything's great. But here we are a year later, and now you're on your own, and you're not sleeping, and it's pretty rough. So just making sure that we keep getting the truth out there, like what you're doing together with me today, because Russia and Putin hate, are perfect at propaganda, and just trying to keep the support up in terms of funding and attention on this.
Well, we wish
terrible, atrocious war.
We wish you well. Please stay safe. Love the blue and yellow that you are wearing that we can see on YouTube and on our streaming service. Andy Kurtzik, be well, founder and CEO of Just Answer, right here on Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check markets all day long at Bloomberg. I'm Charlie Pellet. We begin with a developing story. Source tells Bloomberg Ross Gerber, a vocal Tesla shareholder, plans to withdraw a long-shot effort to run for a position on the company's board. That source says the company has agreed to meet with Gerber next week around Tesla's Investor Day on March 1st to discuss his concerns about the electric vehicle maker's governance. Today, we did have Tesla shares decline by 2.6%. This on a day when the rest of the market sold off. The Dow, the S&P, NASDAQ all finished in the red. Indeed, a losing week for the S&P. On the week, the S&P was down 2.7%. That was the third weekly decline for the S&P. The Dow this week down for a fourth week, falling 3%. NASDAQ down 3.3%. Stocks declined after this morning's PCE report. We had the S&P down 42 points, lower by 1%. The Dow down 336, a drop there of 1%. NASDAQ down 195, a decline of 1.7%. 10-year yield 3.94%, with a 2-year at 4.80%. 2-year now at the highest since 2007. Spot gold down 0.6%, $18.11 the ounce, and West Texas Intermediate crude up 1.5%, $76.55 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC is not alone. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Just get an estimate of your company's potential refund. You can do that today. Learn more at getrefunds.com. Carol Masser along with Maddie Mills, and as we said, this hour really focusing on that 1-year mark since that Russian invasion and war with Ukraine. And we did hear from Ukrainian President Volodymyr Zelensky saying on this 1-year mark of the Russian invasion that his country will secure victory if allies maintain their support, possibly this year. So we continue our look back at the year and what may come. Return, Maddie, to a trusted voice that we have leaned on a lot over the past 12 months since that invasion. Delighted to have back with us Angela Stent. She is Senior Advisor to the Center for Eurasian, Russian, and East European Studies, also served as National Intelligence Officer for Russia and Eurasia at the National Intelligence Council, and before that served at the U.S. Department of State. She's also written a book, Putin's World, Russia Against the West and with the Rest. This is why we have leaned on her so much. She's with us once again from Washington, D.C. Angela, thank you so much. I'm sure many people have been reaching out to you on this 1-year mark, and so delighted that you could be with us again. 1 year in, what occupies your mind, your thoughts when it comes to this war and each day that it continues to drag on?
Well, thank you for having me back on the program. I would say that at the moment, what I'm focused on is this new Russian offensive, which has already begun, the so-called spring offensive. It's going to be a very tough next 6 months. The Russians are still trying to take more territory. The Ukrainians are pushing them back. There's been very, very fierce fighting in a town called Bakhmut, where it's really like hand-to-hand combat, and there have been, large numbers of casualties. So I think we just have to watch that, and we have to see whether the Russians are more successful this time in this offensive than they've been in the past, and whether the Ukrainian army, with the equipment also from the NATO countries, can successfully push this Russian offensive back.
Hey, Angela, I wonder if you can talk about the China situation, because we're hearing mixed reports this week from them. CNN just issued a report that U.S. intelligence shows that the Chinese government is considering providing Russia with drones and ammunition. What is your take on what Beijing is going to do and their role in the war effort for Russia?
So last weekend, I was at the Munich Security Conference. There were no Russian officials there, but the Chinese foreign minister was there. And he made it clear again that from the Chinese point of view, the West is partly responsible for this war. He said there was going to be a Chinese peace plan, which in fact they have issued today. But at the same conference, Secretary of State Tony Blinken gave an interview saying that the U.S. has information that China is considering supplying lethal weapons to Ukraine. The U.S. and other NATO countries have warned the Chinese that they shouldn't do this. We've already had some evidence that their electronic components, which can be used in weapons, have been supplied to Russia. And so it's a little incongruous if the Chinese, on the one hand, say, here's a peace plan and we can act as a mediator, and then they're actually supplying weapons to the Russians. But I think if our people say that they have evidence of this, we have to take this seriously.
I do wonder, and forgive me, I'm trying to think whether it was a Bloomberg column that I read, but this whole idea that, where the U.S. has maybe failed and maybe other countries, in that we've spread capitalism, but we didn't spread democracy. And I wonder...
Our guest said that earlier this
week. Was it a guest? Yeah. Was it one of our guests? Was it Ed Price?
It was Ed. Yeah.
It was Ed Price. Brilliant. And so I wonder how much you think about that, with people saying, well, the U.S. is at fault. Is there some truth to that, in that, whether it's China, whether it's other parts of the world, spread of capitalism, but not democracy?
Well, it's easier to spread capitalism than it is democracy. I mean, people like capitalism. They can make money from it. It's a good system. But it's very hard to influence another country's political system, and particularly a country like Russia or China. But let's take Russia, which has a centuries-old tradition of autocratic rule and very little tradition of ever having had democratic rule. The U.S. certainly tried, and other democratic countries tried in the 1990s when Boris Yeltsin was president, to encourage the spread of democracy there. But we have to understand the limits of our own influence, particularly in a country where the leadership and many of the people are not used to living in a democracy, and particularly in Russia, where they associate the attempts to spread democracy in the 1990s with a very difficult economic situation that they lived in, including a crash in 1998 where most people lost their savings. So I think you can't blame the United States for this. It's not within our power to impose a form of political governance on another country.
Having said that, then, do the allies, the Western allies, have no other choice but to support Ukraine in this?
Well, I mean, at the moment, yes, if we don't want Russia to take over Ukraine and then threaten other countries, because Putin's not going to stop there. I mean, he's made it clear that Russia wants to, quote unquote, take back traditional lands that belong to Russia. And they've even mentioned Poland when they've talked about this. So this really is the only choice for the West, is to support Ukraine, to give it the wherewithal to push back. The Ukrainian army has done extremely well, much better than anyone thought it would, including Vladimir Putin, in this last year. Because if we don't supply Ukraine, it'll be very hard for them to resist what the Russians are doing. And then you will just have a more aggressive Russia in Europe.
Angela, can you talk a bit about Russia's strategy when it comes to those historic holding areas that you were talking about, specifically related to how they're targeting, museums in Ukraine and cultural historic centers?
So they're really trying to erase any independent Ukrainian history. In 2021, Putin published a 5,000-word essay where he claimed that there were no such things as Ukrainians, that Ukrainians, don't have the right to a separate state, that Ukraine isn't a separate nationality, that they're, brothers and sisters with Russia. And so they have been trying to eliminate some of, Ukraine's culture. It's terrible what they've done there to the museums, to the libraries, to these vestiges or evidence of Ukrainian culture, because of his claim that Ukraine belongs to Russia and that Ukraine isn't even a country. That's what he said to President George W. Bush in 2008. He said to him, you have to understand, George, that Ukraine isn't even a country. Part of it used to be in the Austro-Hungarian Empire, and most of it, he said, was in the Russian Empire. So that's what his view is.
Hey, Angela, what do you make of China's involvement at this point in talking about brokering a peace? They officially put out a plan or a paper, if you will, in terms of some kind of peace accord. How does that kind of complicate the situation?
Well, I've read the so-called peace plan. It's rather general, I would say, and it really repeats talking points that they've had before. I don't know how much of an impact this will have, because none of the NATO countries have already said that they don't. This isn't a serious peace plan. The U.S. has said that. Other allies, European Union has said that. I'm sure that some of the countries in the global South who haven't condemned Russia and haven't sanctioned it, they will say, look at the Chinese. They're trying to put forward a peace plan and we should negotiate seriously. But it's very hard to have a credible peace plan if China is really supporting Russia. It's supporting all the Russian narrative about the war. As I said, it's supporting to some extent Russia with components for weapons. It's supplying technology to Russia, which Russia can't get now from the West because of the Western sanctions. So it's not a neutral party in this war.
Because Janet Yellen has certainly warned of some of the consequences if China ultimately provides help to Russia specifically. And we're going to come back. We've got to do some news, and we're going to come back because I want to continue this conversation, and I want to get into more of Vladimir Putin so well and understand kind of what makes him tick, and I want to get into that. We're going to continue with Angela Stint. She is senior fellow at Brookings. She's written a book called Putin's World, Russia Against the West and with the Rest, and we're going to get back to our conversation on this day where, hard to believe, but we are, yes, indeed, marking 1 year since that Russian invasion of Ukraine. All right, you are listening to Bloomberg Radio. Let's head back to D.C. Nancy Lyons with World and National News. Hey, Nance.
Thanks, Carol. Well, the United Nations Security Council marked the anniversary of the Ukraine war with renewed support for Ukraine. Bloomberg's Irv Chapman has more from Washington.
Secretary of State Antony Blinken urged rejection of any calls for a ceasefire or a useless peace plan that ignored basic principles.
No seizing land by force. No erasing another country's borders. No targeting civilians in war. No wars of aggression. For peace to be durable, it must ensure that Russia can't simply rest, rearm, and relaunch the war in a few months or a few years.
Blinken described Russia's war crimes and atrocities that require prosecution, and he added that in this war there is an aggressor and there is a victim. In Washington, Irv Chapman, Bloomberg Radio.
European tanks are beginning to arrive in Ukraine ahead of Russia's spring offensive, but Ukraine is still pushing for fighter jets. Defense advisor Yuri Sachs says it normally takes a year to train on advanced fighters, but Ukraine's pilots are ready.
We are in a situation where first we already have pilots who have combat battlefield experience, and our pilots are ready to be trained in 3 to 6 months. They will be ready to fly these platforms.
Ukraine defense advisor Yuri Sachs tells Bloomberg jets will be instrumental in achieving the victory he hopes will happen this year. First Lady Jill Biden has given one of the clearest indications yet that President Biden will be running for a second term, telling the Associated Press today there's pretty much nothing left to do but figure out the time and place for the announcement. While Biden has long said he does intend to seek re-election, he has yet to make it official. During his second day on the stand, disgraced South Carolina attorney Alec Murdaugh has been testifying he fully cooperated with police investigating the murders of his wife and son. He says he cooperated in every way except when he lied about the last time he saw them alive. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
jets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check the markets all day long at Bloomberg. A losing Friday, losing week as well. 3 in a row for the S&P 500 index this week, down 2.7%. The Dow this week down 3%, declining for a fourth week, and NASDAQ down 3.3%. We do check markets all day long at Bloomberg. Wall Street's reaction to hotter than estimated inflation data this morning suggests growing bets that the Fed has a long way to go in its aggressive tightening crusade. S&P down 42, drop there of 1%. The Dow today down 337, a decline of 1%. NASDAQ was down 195, a drop of 1.7%. 10-year yield 3.94%, with a 2-year yielding 4.80%. Gold down $11 the ounce, down 0.6%. West Texas Intermediate crude up 1.5%, 76.55 a barrel. Charlie Massimo is a financial advisor at Wealth Enhancement Group, and right here on Bloomberg Business Week, he told us the economy is not yet feeling real pain.
People aren't really feeling a lot of pain yet. People are still, buying homes with a 5 to 6% mortgage. They're still buying cars. They're still taking luxury trips. But when mortgage rates go to 8%, when borrowing for a car goes to 12 or 13%, that's when consumer behavior is going to change, and that's when we're going to start bringing down inflation.
10-year yield 3.94%, the 2-year 4.80%, gold down 0.6%, 18.11 the ounce, crude up 1.5%, 76.55 a barrel. Goldman Sachs eked out a gain of 0.1% today. It has approved a new share repurchase program authorizing as much as $30 billion in stock buybacks without giving a timetable. And a source tells Bloomberg Ross Gerber, a vocal Tesla shareholder, plans to withdraw a long-shot effort to run for a position on the company's board. Tesla today down 2.6%, and that is a Bloomberg Business Flash.
Thanks, Charlie. As we've been discussing today, marks 1 year since the Russian invasion of Ukraine. We're going to get back to our guest, a true expert on all things about Russia and Putin and so much more. Angela Stent, Senior Advisor to the Center for Eurasian, Russian, and East European Studies. She also served as National Intelligence Officer for Russia and Eurasia at the National Intelligence Council. Before that, served at the U.S. Department of State. Also author of Putin's World, Russia Against the West and With the Rest. She joins us from DC. Angela, we're going to dig into the Putin side of things in this block because you have such an incredible understanding of the man behind this. What do you think is the biggest misconception that we might have in the U.S. about what motivates Putin most?
Well, I think we have often thought about Putin either as a master strategist or as an excellent tactician. And I think this war has shown that probably neither of those are true anymore. Certainly not the strategist, but even the tactician. He started this war obviously misinformed about what was going on in Ukraine, and with lots of misconceptions about the strength of the Russian army and the weakness of the Ukrainian army and the weakness of the West. He thought that because of the withdrawal from Afghanistan, how that had played out, that the Biden administration was weak and it wouldn't respond. So I think we have to reassess how savvy he is in understanding really the outside world. And I think a lot of people believe that the 2 years of COVID isolation, where he really didn't see any foreign leaders and was just surrounded by a small group of people who share his views and reinforce, if you like, his paranoia about the West, really affected him in the run-up to this war.
It's like a celebrity, right? That just surrounds himself with people who just say yes, 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 or something to some extent.
Yeah, he is. He is. And certainly even his intelligence officials who were on the ground in Ukraine gave him false information about how the Ukrainians would respond.
That's so fascinating. When you think about his perspective on the U.S., would you say that Afghanistan piece was the critical maybe turning point for him?
I think it was very important for him because I think he saw what happened and the disarray there. And then, of course, he also realized that in the previous administration, U.S.-European relations had really sunk to a new low. So I think he probably thought that the Biden administration wouldn't have the resolve. And certainly he didn't think that the Europeans would go along with the U.S. in presenting a united front in this war.
It is pretty remarkable, Angela, when we think about the global stage and the big players that are out there, the countries that are out there, that how much Vladimir Putin and Russia in particular has really dominated the conversation for a long time. Having said that, how do you strategize about kind of what's next here when it involves Russia and Putin?
So I think from, I listened carefully to the speech he gave on Tuesday to his Federal Assembly, his State of the Union speech. And the message to the Russian people was, the West is out to get us. This war is going to go on for as long as it takes. We will not be defeated on the battlefield. And basically, if you don't like it, it's too bad because that's what's happening. So I think as far as we can see, this war can go on for a long time. He is determined to prevail. We don't quite know what he didn't tell us in this speech is actually what Russia's war aims are. How would they define victory? We don't know that, and he hasn't been explicit about it. It's possible that victory for him would be just, quote unquote, the control of the 4 territories that he now claims Russia has annexed, even though it doesn't fully control them, or still his sights might be on taking all of Ukraine, and not deterred by the failure to do so until now. So I think we're in for a long war.
And we talked a little bit about how Putin was able to reemerge after the previous economic crash in Russia. We've got news today on more sanctions. We're always getting news about more sanctions. Is there a point that Russia's economy gets to that Putin has trouble recovering from?
So far, the sanctions really haven't had the kind of impact on Russia that the U.S. and its allies thought they would. I mean, Russia's economy is actually forecast to grow this year, not by very much, but by some. They've obviously been they're still reaping in the revenues from oil and gas sales, even if there's a price cap, but they're still getting money from that, which is also helping to fuel their war machine. And the average Russian has not felt the pinch yet. So the sanctions may bite more in 2023, particularly the export controls, the lack of semiconductors, of spare parts, that may have more of an impact on the economy. But it doesn't, Russia has a tradition of being able to withstand these sanctions, and so far it's done so.
Hey, Angela, I do wonder about, Putin, the individual who invaded Ukraine 1 year ago. Is he the same individual leader who back in 2014 invaded and subsequently annexed the Crimean Peninsula from Ukraine? Is he the same guy? Is he different, emboldened? I don't know. How do you see it?
Yeah, so I think before this war began, most people thought of Putin as someone who wasn't a huge risk taker. If you go back to 2008, when Russia invaded Georgia, instead of going all the way to the capital, Tbilisi, and removing the president, Saakashvili, whom Putin hated, they stopped. There were 2 territories that they then declared were independent. So Georgia was partly occupied by Russian troops, but they stopped there. And in 2014, yes, they annexed Crimea. They didn't have that much resistance then, and they did start the war in the Donbass, but then they stopped. And there was a ceasefire and there was a peace agreement that was never fully implemented. I think the difference now is this was a huge risk, a full-scale invasion of Ukraine with really not enough troops to do it. So he appears to be more of a risk taker now.
Right.
Maybe it's because he's thinking about what his legacy is.
Well, you wrote your book, Russia Against the West and With the Rest, back in 2019. Just 30 seconds. You called it Putin's World. If you were writing a new book today, what would be the title, perhaps?
Well, it would be Putin's World Has Shrunk because his, the relationship with the West is so bad. But the relationship with the global South and China, those relations remain pretty good. So Russia is not isolated.
All right. Is that a title? That's a long title. Shrunk. I like that. Angela, thank you so much. I mean it sincerely. You have really given us a lot of time over the past year, to myself and some of our Bloomberg colleagues, with some really great insight, and it's been really so important to our audience. So thank you so much. Stay safe, be well, and I hope you have a good weekend. Angela Stent, Senior Fellow at Brookings. As we said, her book, Putin's World, Russia Against the West and With the Rest, joining us via Zoom from Washington, D.C. So very thoughtful conversation on this Friday. You're listening and watching Bloomberg.
company news headlines on Bloomberg Radio.
4:53 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. Sources tell Bloomberg Pioneer Natural Resources is considering an acquisition of Range Resources. The sources say the Texas-based oil and gas explorer is weighing a deal for the smaller U.S. rival as it seeks further consolidation in the shale industry. Today, we had shares of Pioneer down 4.1%. Range Resources rallied 11.9%. A source tells Bloomberg Ross Gerber, a vocal Tesla shareholder, plans to withdraw a long-shot effort to run for a position on the company's board. Tesla shares today down 2.6%. The walls are closing in on online used car dealer Carvana, whose disappointing quarterly results sent the stock into free fall. Today, we had shares of Carvana down by 20.5%. Also, it triggered a string of warnings from analysts, with JP Morgan dealing the harshest blow And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, this has all really triggered a string of warnings from analysts, and JP Morgan is dealing the harshest blow here. In a note to clients, analyst Rajat Gupta says the one-time hedge fund darling's high debt levels suggest there is absolutely no equity left in this stock at all. Carvana shares had been on a wild rally this year, rising more than 110% through yesterday. That's amid a surge in what you might call the speculative corners of the market. Now, despite the sell-off today, the stock, Charlie, is still up almost 80% this year.
And those are some of our company stories. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
We've got more Business Week for you coming up. I'm Madison Mills here with Carol Masser, of course. But before we get onto it, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. Well, it is the one-year anniversary of Russia's invasion of Ukraine, and Bloomberg's Maria Tadeo is in Kyiv.
When you look at Ukrainian TV, the way they present this is not the one-year mark. It's not the one-year anniversary. What they say is 1 year now closer to victory.
Maria Tadeo reporting from Kyiv. Ukrainian President Volodymyr Zelensky told reporters today he's sure they will secure victory if allies maintain their support. Well, China is pushing back against claims that it plans to provide support in the way of lethal aid to Russia in the war. Bloomberg's Amy Morris has more from Washington.
Germany's Der Spiegel reported that Beijing is negotiating to send Russia armed drones. China's foreign ministry spokesman responded, saying that China never sells arms to parties involved in a conflict. U.S. Secretary of State Antony Blinken says China's government probably did approve of Chinese firms providing support, but he didn't provide any evidence of that. Blinken will travel to Central and South Asia next week for international talks, putting him in the same room as his Chinese and Russian counterparts. In Washington, I'm Amy Morris, Bloomberg Radio.
In South Carolina, Alec Murdaugh spent a second day on the stand in the double murder trial of his wife and son. Under cross-examination, the disgraced attorney admitted there have been holes in his story.
Other than lying to them about going to the kennel, I was cooperative in every aspect of this investigation.
Very cooperative, except for maybe the most important fact of all, that you were at the murder scene with the victims just minutes before they died.
That's prosecutor Creighton Waters making the point that for 20 months, Murdaugh said he was never at the dog kennels the night of the murders, which was where the bodies were found. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Madison and Carol.
All right, Nancy, thank you so much. Have a good weekend. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future that you want for your business. Want to learn more? Just head to getrefunds.com. All right, Carol Masser along with Maddie Mills getting ready to wrap up the day. Great weekend show. We covered a lot of the geopolitical, including the one-year mark of that war in Ukraine. Ed Price was one of my favorite interviews of the week.
So good. And of course, Angela Stent also was amazing on the 1 year anniversary. Just so much insight from her that I had never thought about before.
I know we got off air in our break and you're like, oh my God, she said this, she said, I mean, it's just a lot of things that are very thoughtful and understanding and getting into the mind of Vladimir Putin in particular.
Yeah, I mean, she literally wrote